Chakri, good afternoon. Since you're with me right now here on the show, first cut for Ultratech Cement, if you can see it, 81% uptick on a quarter-on-quarter basis. PAT has come in above street estimates, revenue and EBITDA in line with estimates. They're saying the sustainable volume growth of about 7 to 8%.
Good afternoon. At first sight, the numbers look to be good. They look to be having beaten the consensus numbers. And, 7 to 8% volume growth is kind of what you expect. And, I think overall, the capacity utilization is lower, and therefore that provides the operating margin expansion as you go into the second half. But we'll wait for the details. But it looks like to be a quarter where they've actually beat estimates. And, I think the margins also are likely to improve.
So margins are also likely to improve, but in some of the other commentaries, and especially with related to capex, because the company has been taking underway a lot of capex, they say that the expansion program is progressing as per the schedule. Ultratech's domestic grade cement capacity has increased to 183.4 MTPA on a consolidated basis, as well as the India's leading cement player Ultratech is definitely eyeing a good demand, especially in the rural as well as urban market. And while Cheryl highlighted that a sustainable volume growth of 7 to 8% is expected going forward. But Chakri, along with that, a 7 to 8% volume growth can, when we expect that, and along with that, what we are getting to here is that the cement sector as a whole has been undertaking so many price hikes, and that is sustaining for a change. Do you believe a good time for cement could be in the offing, or do you believe that the much is already in the price, given the fact that all these cement majors have been doing very well of late?
You're right to point out that they've been trying to increase prices, but we also have to take into account that the prices for cement companies have not been increased in the last 3 or 4 years. The increases at best have been below inflation rates, in fact. So which means I think the cement companies therefore have sufficient leeway to raise prices further. And, as interest rates percolate downwards into the industry and volumes pick up, manufacturing picks up and infrastructure picks up, that will do well for the companies. And as a result, you'll also see some amount of margin expansion, and price hike will help it further.
Coming in on Ultratech Cement. Kunal, on the charts, Ultratech Cement and the rest of the cement counters, which one do you think stands out? Would you also go with Ultratech Cement as the fair choice?
I think there are many stocks which are actually starting to look attractive, Cheryl. So, we were discussing this, I think, last week, that, Shree Cement is the one which has been looking very strong. And, especially a point where, the stock had broken past above its previous 52-week highs. Ultratech Cement was coming very close towards that kind of a breakout. I think 12,700, if I'm not wrong, or just thereabouts, is the lifetime high levels for Ultratech Cement. The stock is still, trading around those zones. I believe these are very strong charts, both of them, so Ultratech Cement as well as Shree Cement. But then I think the markets are also finding, other stocks as potential candidates of covering up the underperformance. You've seen Dalmia Bharat. I think last week there was a very strong couple of days of candlestick up move for Dalmia Bharat. And then you've seen the likes of ECC, Ambuja. Even these stocks have started to show signs of recovery. So the choice is getting a little bit more broad-based. Yes, Ultratech Cement and Shree Cement are the two ones which are considered to be the leaders, because they generally set the tone for the entire sector. They are the ones which first move up higher, show signs of strength, and then it follows by other stocks to start to follow them. So I believe that we could probably be at a time where, the leaders from this sector, they may take a little bit of a pause, but the sector would keep on trending up higher.
The leaders may take a pause at this point in time. Let's watch out for Ultratech Cement. Well, of course, after the earnings and after the commentary, that in the short term, there could be some challenges within the sector. The stock is down almost 2% as we speak right now. But with this, viewers, let's move on. And a slew of stocks are reacting to the earnings. We caught up with the management of Shriram Finance, IDFC First, L&T Finance and DCB Bank to understand the road ahead for the business. Listen in.
We had said that we'll peak in Q4 of FY25. And then we said that every quarter after that, progressively provisions on microfinance should come down. Basically, it's think of a wave. So initially it went up, peaked out, and then it is coming down. So we stand by that. So we already called out that Q1 of 26, you should see MFI provisions less than Q4, Q2 should be less than Q1, and Q3 should be less than Q2, and so on. So we feel the wave is receding, so to say.
Looking at growth of asset rather than just plain disbursement. Though we are guiding for 15%, but I would say, I mean, what we are aiming at is between 15 to 18%. So I think we should end up somewhere between that. We are not looking at growing at 20%, 30% AEMs. We would be very happy to grow at 17, 18%. I mean, though you are guided for 15, we would be happy to grow at 17, 18%, and would like to focus on the bottom line more.
Overall, on the back of a reasonably okay, FY25, we are looking at a strong FY26. So we expect that as more and more rate transmission starts happening by the lenders to us, we expect that our weighted average cost of borrowing to ease slightly further. Though, we do not expect a much of easing in H1, we expect a reasonable amount of easing in H2, which obviously, on the long run will help us improve our NIMs.
In the coming few quarters, you would see more of organic loans coming through as compared to co-lending. So there will be a skew in favor of higher yield products within the credit framework which we have, the business strategy that we have adopted. We're looking at a NIM stabilization in the wake of 2 rate cuts that we've happened. Going forward, on the immediate basis, there has been some cuts on the savings account rate, which is an immediate impact. But as matters stand, at the present rate, we really believe these 2 items on the liability side and 2 items on the deposit side would help stabilize and shore up the NIM in the coming quarters.
Closing trades right here in 18 now. If you look at the markets, yes, we are holding up around those levels in excess of about 24,300 mark. Got a good strong handover from the global markets over the weekend, and we're trying to hold on to those levels at this point in time. A lot of stocks reacting to the numbers. Case in point being Reliance Industry, RBL Bank, Shriram Finance, L&T Finance, all of these counters reacting to their numbers in today's trading session. But Chakri, let me get your view. So far, the way how the earnings season have panned out, have you been really happy with it, or do you think that it just opens a Pandora's box and this will only lead to further downgrades?
The way the quarter has been panning out is there have been earnings cuts in general, and I think that trend is likely to continue. So if this trend continues, then Nifty might have an earnings cut anywhere between 3 to 5%. That would bring down the overall growth, let's say, year-over-year growth to about 8 to 10%. But I guess, the market was kind of anticipating it with Trump, tariff wars, all the uncertainties. But now with the interest rate cuts, and hopefully, there is some kind of stability also both on the border as well. And if all those things happen, then in the second half, hopefully with lower interest rates, the market will start moving the earnings upwards.
But let's also put the spotlight on M&M, because that was one of the stocks that was in focus on the back of the deal and the acquisition of SML Isuzu being done by the company, where the company has announced that they will be acquiring almost 59% stake in SML Isuzu for 555 crores. And not just that, with respect to the SEBI's mandate, they will go ahead with a 26% open offer, and the indicative price is close to 1,584 rupees. That means additional 585 crores is what M&M will spend. But well, of course, with respect to the EV by EBITDA, almost a 7.5 times for this particular deal is what we have seen. That looks quite attractive, and given the fact that M&M will now have the exposure within the ILCV segment, and that will help the company to grow themselves and gain market share in over 3.5 ton CV category. That is something that is taken positively indeed. And on this deal, we spoke with Rajesh Jejurkar, Executive Director and CEO of Auto Farms and Sector M&M. Let's go across and listen into him.
SML has an electric bus ready. We had not done any work on electric buses. Electric buses, it will be a very fast growing segment as well. So I don't think this is an indication of the fact that other parts of our business won't grow. It's just that what's the new avenue for growth, not just for the auto business, but even as a group. And a 5,000 crore business which can go in the next 3 to 5 years to 10,000 crore plus is not something which is insignificant. Right now, at least, SML Isuzu as a separate listed entity will stay a listed entity. The trucks and buses business of M&M stays within M&M. We will look at how we fully synergize operations and resources, talent, platforms to get the growth and scale. So we will have to, in our mindset, even though they are in two separate legal entities, think about it as one.
All right, so that's the management of M&M. You have TVS Motor also that's come out with the numbers. We'll get you the numbers in a short while from now. On the surface, if you look at the PAT, it's coming at around 852 crore rupees. The street was anticipating somewhere around the range of 730 to 750 crore rupees. Revenue is also beaten the street estimates, 9,550 odd crore rupees. Let's wait and watch out for more details to come in for TVS Motor. As you can see it on your screen, a sharp spike on back of good set of numbers for TVS Motor, because the PAT is coming at around 852 versus 485. The revenue is coming to around 9,550 versus 8,169 crore rupees. The spectacular numbers coming in for TVS Motors, at least on a YOY basis. But Kunal, let me come to you and let me get your BTST ideas.
So Cheryl, there'll be two buy calls, and the first one is one United Spirits. That's something which is starting to look attractive. In fact, today the stock has come back into a recovery after the last 2 or 3 days of correction. I think closer to this 1550, 1516 mark. Would look out for a buy with a target of 1620 for United Spirits, and stop loss could be kept at 1520. And the second will be a ban ABFRL, Aditya Birla Fashion. Today's candlestick pattern is more like a bullish engulfing pattern for the stock, breaking past about the previous resistances around the 270 levels. So keeping 270 as a stop loss, would suggest a buy in ABFRL for a near-term target of 282.
So that's the BTST ideas coming in from Kunal. What about you, Aditya?
I got a buy recommendation on Sun Pharma. It's a fresh breakout from a downward sloping channel. Excellent volumes in trade today. I think can be bought at current levels for a target of 1950 on the upside with a stop loss at 1800 on the downside. Excellent risk to reward here as well. So Sun Pharma for me is a buy BTST idea. Second is an Oberoi Realty from the real estate pack as well. There are a few stocks which are buzzing around. So I think Oberoi Realty is looking interesting to me for a target of 1800 on the upside. Can be bought at current levels with a stop loss at 1600 on the downside.
Right, so those are the BTST ideas coming from both of our experts. Chakri, let me get your view on TVS Motor. What a spectacular number if you look at it on year-on-year basis. And if you compare it to what the street was anticipating, they've beaten those estimates. The reported operating margins have come in around 14% versus 11.3% on a year-on-year basis. How should one gauge these numbers? And do you think that this would set the benchmark for two-wheelers?
I'm just looking at the numbers on your screen, and they seem to be very good, excellent numbers. And, they've beaten estimates, and the expectation itself was a very strong number. So on the back of that, I think TVS Motors doing an excellent job in execution. So it looks like the volumes have held up, and therefore it's allowed them to beat the numbers. So on back of that, clearly would buy TVS Motors, but I wouldn't expand and extrapolate TVS Motor results onto the other two-wheeler companies, because these set of numbers are really, really strong.
Really strong numbers coming in from TVS Motors, and at a time wherein there was no fireworks seen in the two-wheeler segment. The margins, look at those numbers. That's the key takeaway, because I don't remember when TVS Motors last time hit a margin over 13%. As per my guess, this is the highest ever margin being reported by the company, because for now we have seen TVS Motors sustaining a margin over 10% mark, which was commendable in such an environment. But 13.2% is what the company has clocked in, and that's phenomenal. And along with that, on all the parameters, be it revenue, profit, as well as EBITDA, the company has surpassed the street estimate with a very big number and a very big margin. Not just TVS Motors believe that the kind of performance that the company has given, because we have seen a turnaround in the electric division. Similar could be said for Bajaj Auto. Maybe this is a time to look out for some of the two-wheeler counters. And Kunal, I just wanted to have your take on TVS Motors first, because the stock is already up 3%. A very strong set of numbers. But in respect with that, how do you see Bajaj Auto as well on the charts?
Yeah, I think Bajaj Auto and both of them, of course, are distinctive charts, because Bajaj Auto is still trading, sub the 200 DMA. the stock is still yet to recover, more than 30% of what it has lost in the last, I think, 7 or 8 months of the straight price correction for Bajaj Auto. TVS Motors, of course, is one of the stronger charts. The stock is holding a much above the 200 DMA by a margin of, I think, 10% or so. So both of them are, completely different charts altogether. But I believe that eventually what happens is that when you see a stock moving up higher, from the sector, and that gives confidence to the other stocks to start to get back into a breakout mode. So the negative news flow generally gets absorbed in a much more convenient manner for the stock prices. So I believe in that context, maybe there could be a time where Bajaj Auto in the near term could also get into a breakout. I would look out for, say, 8,500, 8,600 as a near-term target for Bajaj Auto. But the move for TVS Motors today is also very, very intriguing. And this indicates that the stock is one of the leaders from the entire two-wheeler pack. So expecting TVS Motors to move up higher and continue to trend up on a stronger manner. But even Bajaj Auto can start to see a decent recovery.
All right, so that's the take coming in on two-wheeler majors, given the fact that you have TVS Motors coming out with spectacular set of numbers, with margins, profit, revenue, all of them beating the street estimates, with the stock actually taking a big jump right now, trading higher by about 2.5% as we speak. So watch out for the rest of the two-wheeler majors as well, and how they actually perform in a trade or in times coming ahead. But Chakri, let me get your word actually when you talk about the pharma space, given the fact that this one, a lot has been riding on this particular sector, given the fact that you have a lot, we're talking about the tariff front, then it is a go, no-go zone. Everyone's contemplating on that particular front. But which side of the fence are you when you talk about pharma?
I think all the kinds of uncertainties are kind of reflected in the price. The export-facing companies clearly are the ones more at risk, like Dr. Reddy's or Glenmark's or Lupin. But I think, Glenmark, for instance, has corrected fairly significantly. Valuation-wise looks all right. Dr. Reddy's, for all its uncertainties, also valuation is looking all right. And whereas, therefore, I think, if anything, I just buy them for about maybe a 10-15% return from current levels.
The take coming in of pharma space. On that note, thank you so much, Chakri, Kunal, as well as Aditya, for joining us on the show and giving us your take on the markets. As of now, TVS Motor